Varun Daga, they both join us. Let's take our conversation forward. Gentlemen, good morning. Thank you for joining us. Varun, these are exciting and interesting times. One side, we've got this inflation concern, which is loud, visible, and easily understood. On the other side, you've got earnings which continue to surprise us. Sectors like IT, sectors like banking, all of them are surprising us within uptrend. How does one find balance in this kind of a market where inflation and rich valuations are going to be a deterrent, while growth as well as P expansion could be the order of the day?
Thank you, Nukunj. First of all, a very, very happy Diwali to all your viewers and you. Let me start with the markets. So, you're right. There is worries like inflation and supply chain issues, raw material inflation with a lot of these companies. But what we are hearing with most of the companies, I think everybody is extremely bullish. Uh, in fact, if you see the earnings, it's extremely positive, and a lot of places we are seeing a lot of surprises. So. Uh, it's very normal. We've seen so many years of history, and history always, there's been times where there are inflation, there are worries, there are so many situations where there are a lot of concerns. But I think the key is that if the earnings are growing, markets are slave to numbers, right? And I think there is not, we've not seen a time where there's more visibility in earnings in every sector than today. So I think it's very clear. Of course, you can see minor corrections, but we don't see a large, fall in Nifty, especially the larger index as Nifty. If you look at in terms of the EPS, we're expecting about 850 rupees EPS for next year. And that's about a 22 times, 23 times on the Nifty. So uh, if any correction comes, a 10 to 15% correction, I think it'll be a great long-term opportunity to add to the positions. Of course, the broader markets could have sharper corrections, but uh, as a Nifty index, we don't see correct much corrections. But if there is any, it is going to be a golden opportunity because the earnings visibility is very, very clear.
Sandeep, I'm just scanning through the portfolio which is available in the public domain. And since we've spoken about some of these stocks, so I remember last time when we spoke, you had a big exposure to metals, which is missing. And I can see that telecom as a sector, along with Tata Motors as a stock, has made a comeback. So let's first spend some time trying to understand that why your view on metals has changed.
Okay, so hi Nikunj, good morning to you and your viewers. I'll tell you, so we are more, on the metals, we are more focused on the aluminum side. We have reduced our exposure to the steel side. We see this as a more secular trend, and it's, something where there is a larger and longer earnings tailwind. We're very cognizant of the fact that metals are cyclical companies, and one has to, make sure that if you believe the earnings are close to peak or peaking, one must trim their exposure because these tend to be very cyclical and something that we can't handle beyond the point. So we are very overweight. We've just reduced it to a more normalized sort of weight.
How do you see, Varun, today Nykaa listing, and could it go the Zomato way, which is that a dhamakedar listing and the stock just in a sense plateaus, or could it go the DMart way, which is after a dhamakedar listing also the stock keeps on making new high?
Interesting question, Nikunj, but I think it'll be more like a Zomato way. That's my view. Phenomenal company. I mean, all three of them, like DMart, Zomato, and Nykaa. It's amazing what they have done in the last few years. But Nikunj, it's about how much are you paying for growth. I can tell you in the case of DMart, you were not really. It looked expensive on the face of it, but the growth was very, very visible, and probably you are paying for 3 years of growth, right? So here I don't know, maybe it depends on what it lists and then where it goes. But one has to ask that question, that how many years of growth are you paying for, right? If it's 5, 7, 10 years, then it gets, I mean, your IRR really falls down, because you really can't pay for 10 years of growth, right? You have to, because there will be times in the middle where companies will see hiccups, there'll be times when markets will see hiccups, so one has to be it's a great company, but is it a great stock? That time will tell. And I think, there's a lot of FOMO, where everybody wants to get in IPOs like these. But I think that wasn't the case of DMart, right? I think when DMart listed, it was, everybody was like, it is very expensive, we can't buy it. And people asked us that, really, you're buying DMart? In the case of Nykaa, it's more like, oh, why haven't you bought it, right? So a phenomenal company, great business. In terms of what price you pay for it, I think one has to do more work and take a smart decision.
So Charandeep, what is your view on Paytm? Since you own Bajaj Finance, which is also a play on fintech, and the fact that they would be launching a new platform, I'm sure you would have looked at Paytm also very closely.
Yeah, yes, we have looked at the entire space in financial services. Now, Nikunj, to basically break down the space in financial services, you have two sets of companies. The big banks, the 4 or 5 money center banks, which really own the customers and have owned them for many years, and have a very healthy set of liabilities, right? They have liabilities which gives them access to assets and customers, and they are able to grow in a consistent manner. Bajaj Finance was somewhere in the middle. They're in the process of building out that liability franchise, but they had an excellent fintech style customer acquisition engine. So they had a bit of both. In the case of Paytm, I think, what we've seen is the customer sort of mix is more at the low end, right? Do they even really own the customer? Time will tell. I think, again, it is very similar to the argument Varun made on Nykaa, is you have to really decide what you want to pay for this. And waiting several years for cash flows and running losses and not seeing monetization of customers in the near future, something we don't have the ability to do, to sort of forecast where the customer that you sort of own will turn cash flow positive. So that's a little difficult for us to analyze at Girik. We are far more comfortable owning what we understand. And I think a lot of the fintech space, we believe, ultimately will have to collaborate with the money center banks, because remember, India is not China or the US. There is a regulator here which actually will stop you from doing various things if you're not a bank. So it's not easy for a non-bank to actually survive, especially the fintechs. I think there will be lots of restrictions on their operations. And I think it's important that they probably collaborate with the money center banks who own the customer and own the liabilities, but are not so sharp on customer acquisition as many of the fintechs might be. So we'll wait and watch on names like Paytm as to how it shapes up. We believe we have the benefit of time. There's no rush to take decisions today.
Well, Tata Motors has made a comeback in the portfolio. Is this about the cyclical or the capex revival theme or the economic recovery theme you're betting on, because Tata Motors is also a proxy to CV, or is it a pure play on the exciting things which are happening in the EV space?
So I think all three things. One is, yes, of course, whatever is happening on the EV space, that's you can't really evaluate that what's going to happen. But I think what you can is the CV cycles clearly turning. So that is one part of the business which will turn around. The other part is the passenger vehicle. I think we are very, very excited on the passenger vehicle, the India business. We really think that they've made a lot of growth there. They've made a lot of effort there, and they're gaining market share, and they're giving competitors a tough fight. So we really feel that that could be a business that could surprise in a big way. And of course, what they're doing on the EV side and aligning that with the passenger vehicle business could be extremely exciting.
Charandeep, in the light of what is happening in China, how does one understand what will happen to energy prices, which way coal demand would move, which way metal demand would move? Because that's one big variable. We are accustomed to a scenario where China only consumes. Now we'll have to build in scenario where China slows down.
Look, I honestly, Nikunj, I wouldn't have the answer to that. I mean, although we are aware, very well aware that there is inflation all around us. The only thing is that, inflation can cause, inflation hasn't been around for almost a decade now, right? And you're starting to see it show up in various places, in food, in energy especially. I mean, that could dent profits to a lot of companies in India, which we thought was secular. So one should be aware of it and keep a close eye on it. But no, I can't really answer that question as to where this will go in the future because, nobody really knows. I mean, it's very hard to tell what's happening in China. But what's very clear is they're pulling back, right? I mean, in general, they're pulling back on, dirty fuels, stuff that pollutes the environment, heavy manufacturing. And you are, on the other hand, getting a lot of manufacturing beneficiaries in India due to that, such as in the textiles and the chemical space, and maybe even more, maybe electronics. It's a very, very early stage, but that does seem to be a corollary of this whole China fallout where India stands to benefit. So, on the energy side, I don't have an answer to your question, but I think that what's happening there will have huge ramifications for the companies in India and their opportunity set going forward.
Varun, since you have Zomato as part of your portfolio, I just want to understand that how essentially are you valuing some of the internet companies? Because it's not one. Now, handful of them will go public. Handful of them have already gone public. PharmEasy has filed in for a IPO draft. It could be 2-3 more unicorns which will go public before March ends. What is the best way of analyzing some of these high growth businesses which are growing, which have a promise of technology, but have no clear future guidance on when they would be profitable or they would be cash flow positive?
Sure. Good question, Nikunj. I think there are 3-4 factors one needs to look at. I think the first thing is leadership. Is how big the leader it is? Is it a 1-player market, 2-player market? How many people can enter in this market? And is it established its leadership? So I think companies like Nykaa, yes, has established leadership. Zomato, Swiggy, they have established their leadership. So I think the first step is, defining whether it's a leader or not. Once you do that, I think the second step is understanding how large the market is, how long this company can grow at a fast pace. So there are times where you see, okay, the company is currently X, but the size of the market is 100X. I think that gives a lot of comfort that, okay, yes, it's a leader and the size of the market is very, very large, like in the case of Zomato, or like in the case of Nykaa, or like in the case of Policy Bazaar. I think once you understand the size of the market, there is some kind of visibility that, okay, over the next, whatever, 5 years, 10 years, 20 years, this is what the company can get to, right? And then you create your bull and bear case. Okay, in the worst case or in the best case, this in the next 10 years or 5 years, this is what the company can achieve. And of course, after 5-7 years, you want to see some cash flows, you want to see earnings, and it will come. Many of these companies' earnings will come when the acquisition engine, the cost they're spending to acquire their customers goes down, and that will happen once the leadership is completely established, and once you have captured enough customers, the incremental cost to acquire a new customer will go down, and that's where most of these companies are spending a lot of their money, and that's when operating leverage will start kicking in, and slowly you will start seeing profitability and cash flows, right? So the idea is that how quickly that can happen, whether it's going to happen in 3 years, 5 years, 7 years, and 10 years, and how large it's going to be, right? So I think one needs to see that, okay, when it turns profitable, how large can it be, right? Can it be, I mean, we've seen that in the case of Geo, for example, right? It wasn't profitable for the longest time, but today we have a visibility of Jio earning 40,000-50,000 crore of net profit over the next 3 to 4 years. So it's extremely large. I think one needs to see how large the profits can be when they come, and put a multiple to that and discount it to the present value. I think that's the way to do that.
Okay, I'm just scanning through the markets right now, and markets meanwhile clearly are showing signs of little bit of fatigue, little bit of tiredness definitely has kicked in, and that is something which we must recognize after the recent run up, given what is happening at global level, and also how things in a sense are shaping up on the energy and the crude front. Charandeep, a very dominant theme now is climate change, and billions of dollars of investment perhaps will be going in that area by existing companies and by new innovative companies. So for an investor, if somebody is convinced that look, we need to spend more on climate control, but if this is a $1 trillion opportunity, what is the best way to really bet on it?
Let's break this down. I think very good point, because this is see, the equity markets, they love the new and the exciting. And, especially if you can catch some of these themes early, they can be gold. Now, I would say, the overriding theme for the future is definitely, renewable energy, the way we're going to drive our cars, generation of power, movement from thermal to solar, wind, water. I think that's coming, right? That's coming, and that's going to come much faster than we all realize, right? We've obviously got our limitations in India in terms of scarcity of capital. Businesses need to be capitalized for these opportunities. They're going to be very capex heavy, which is why you've seen guys like Reliance get into the mix. So I think that, it's not entirely clear. You don't have necessarily too many pure play, players who are in the business of generating clean energy or making equipment for clean energy. But I think, one will have to go out and look at the ecosystem. So for example, yesterday I read in the newspapers that, HP, BP, and IOC will be installing thousands, tens of thousands of charging points for EVs. A beneficiary of that could be an ABB, because I believe they are in the business of supplying the equipment. Now, how large that opportunity is going to be, or how significant it is on the bottom line for them, how competitive it is, whether some Make in India contours to that, I think time will tell. So I think there will be several technology and corollary ancillary players, such as an ABB, which could benefit heavily from supplying equipment or supplying, the various machinery required to make or generate the power sources that need to come. Look at someone like NTPC. I was reading their analyst presentation. I believe they have a target that by FY26, a significant amount of their power generation will come from solar, or rather from renewables. So someone like NTPC, which is a PSU, is actually making such large plans to outlay that capex. It means that the change is very real. It's front and center. It's going to happen. I would, like to add, I would say there's a second theme which has already played out in markets and is continuing to play out, is in the area of pure technology. Technology sort of led this bull market, be it the Infosys, the Tata Alexis of the world. That's one theme that's played out, and that's a big change. That's front and center. Yeah, I mean, we are talking on Zoom right now, right? When was the last time someone regularly visited your studio? So I think there's a huge change over there. And I think a significant change, which is a given, which is to come, is on the energy side. And I think billions of dollars are being poured in globally and in India. And I think the stock market winners are still to be announced. We don't really have pure plays yet, but I believe that should emerge in the next year or so.
Well, we'll have you soon in our studio, gentlemen, and I promise
We'd love
that
to come,
hopefully next time when we interact, we shall meet in our studio over a cup of coffee and take the conversation forward. But today, well, it's Zoom. So we started the conversation on Zoom and we'll have to end it on Zoom. So really appreciate your time and thank you for joining us.
Thank you so much.